Okay, everyone, welcome back. I've got an early morning video today. I just want to point out a couple things that I'm seeing first thing this morning, and I want to get this video out so that everyone can kind of, evaluate what I'm seeing. Let's get right into it. Leave me a thumbs up if you guys find value. We're going to start out here with Peloton. Now, Peloton doesn't have a screaming sell signal right now, but I do see the potential for a breakdown here in Peloton. So what I'm going to do, we'll look at the daily here. This is the daily chart, and you can see that basically this is your March lows. This is kind of your bigger trend that Peloton was in for all of 2020, basically. It broke trend right here, but there's the break of trend, but that wasn't necessarily your sell signal because we didn't have any negative divergence on the RSI and the PPO. We got that negative divergence on this big gap up right here, and there was your gap up. That was the day that we put in negative divergence. That's the day that I took the short position on Peloton right there. Now, what Peloton has been doing since is you've got the secondary trend line here on the daily chart, and you can see recently we broke down but recovered it, started to recover it right there, and it looks like it's about to break down again, but it hasn't done it yet. So that's why I want to just point it out. I'm not saying it's going to break down, but here's the hourly chart. You can see how it broke down, gapped it back up, recovered, made it look like it was going to recover, and now we're just starting to show some weakness underneath this trend line again. So again, my trend line could be off just slightly, so you want to give it a little bit of room. You want to make sure that it's an impulsive breakdown. But if we see that big impulsive breakdown today, then that's likely going to prove to be a break of this trend, and we're going to start a downtrend in that situation. So I just want to point that out in case it happens. Moving on. Okay, let's look at the financials, and we'll start out start out here with Citigroup. So again, more selling today, down 2%. It's actually the weakest of the kind of the financials that I've been looking at, and that's why I picked Citigroup. It looked like the weakest in general, so that's why I chose this one when I was looking to short the financials. And you can see a couple of things. So depending on how we close today, and so you'll have to wait for the close, but I want to just point out what to look for. On the daily chart on Citigroup, this is going back to 2011. And you can see this was a trend line that is really the bull market trend line since the 2009 lows of the Great Recession. This is your 2009 lows, but again, you didn't really start a trend until about 2011. And basically, you can see we held support through here, we held support here, and then we broke that support back in in the COVID drop here, and then we have a kickback rally to resistance, kind of got rejected, and you can see what they like to do. They pop it above that trend line a little bit, make it look like it's going to recover, and then it failed. And so again, that's kind of where we're at again. We've popped it up above here, and now we're back below that trend line. That's not a good sign, especially if we close back below this trend line. That's a pretty weak close. Now, doesn't mean we will close back. The buyers might step in and bid this thing up. But if they don't, then understand that's a pretty weak close, and I do suspect we get lower prices. Also, the reason why I think we're going to get lower prices on the daily chart here, you can see negative divergence. So all this price action right up in here was all divergent high price action, and that to me tells me we're likely to go lower, to trend lower. So I'm looking for, really 53, about 50, we'll call it 54 to the downside in pretty short order. And then from there we'll have to see, but that's what I've got so far. So yeah, and this was the resistance line. My stop was way up here at this blue line. So all in all, still looking good. We're heading to the downside. Pretty impulsive selling too. You can see here's resistance. The day that we hit resistance, we popped above it, closed above it, and it's been all selling ever since. And impulsive selling, just straight down. So looking good to the downside on this one. Let's take a look at Nike. Nike, I pointed this out, I believe, just yesterday or maybe the day before. Looks good to the downside. And a lot of these are short trades that I'm pointing out because the market's so overbought. When the market gets so overbought and to the extreme upside, I usually look for the downside. I think it's going to be easier to make more money on the downside, even though when you enter a trade, when the momentum's on the upside, it can go against you for a little while. When it starts going in your favor, I think you'll be profitable pretty quick. So Nike, bearish rising wedge pattern right here. You can see this is a daily chart. So it's been in a, this rising trend started to create this bearish rising wedge. And recently, popped it twice to the upside, making it look like it was going to break higher. But again, bearish patterns typically break to the downside. So oftentimes the move, when you see it to the upside, is just short-lived. It's kind of a fake out move. And now we've broken trendline support, did a kickback rally, kind of really 2 days. Tested it here and then just tested it yesterday and then sold off and are continuing to sell off. So again, we're right at like short-term support, which is right about here, just below it right now. It's about 140.50. But we start to trend, we start to kind of put that behind us and start to move lower. Then I think the next level is about 136 on Nike. So this one looks like it's going to head lower. And again, just going back to the daily chart, you can see negative divergence. So this bearish rising wedge, when we started to wedge out right up in here, that was all divergent price action. They put in the negative divergence, signaling where we were about to break to the downside of this bearish pattern. So we haven't seen the impulsive selling yet, but I think it's right around the corner. Another one here, Redfin. I'm really watching this one closely. This is one of those momentum kind of bubble stocks that has really been. The mania is in these stocks that are kind of these online stocks. And so you got to watch it because, the dip buyers are going to buy the dip regardless of anything, especially when the dip first shows up, they're going to buy it. And we're starting to break what looks like a short-term trend here on, this is an example of the mania. You can see how many days this was just ramping higher. That's pretty crazy. That's a move of from the low to the high of 100% in a matter of like a month. So that doubled in a month. And I would expect it to, fall equally as hard when the momentum fails. And that's what I'm looking for, is when does this momentum fail? Because I think there's going to be some really good trades to the downside on a lot of these momentum stocks. And so we've got negative divergence on the RSI, on the daily, and on the PPO. So we have kind of everything we're looking for there. And we're just looking for price action now. Looking at the hourly chart, this is a short-term trend line right here. We kind of been hanging in there, and we're just starting to break. It's just not that impulsive yet. So I'm looking for a little more impulsive breakdown action to really start the momentum to the downside. But I want to point it out before it shows up. So if it does show up, you have an opportunity to act on it. Again, everything in this channel is just my opinion. Nothing's trading advice. I'm not a financial advisor. If this thing breaks down, I think it's likely we're going to come down to this red trend line down here around 55 or so. That is kind of the shorter term trend that this thing made. So I think it's very likely we get down there. And then from there, who knows? We could easily get down to this 32, about 33 bucks right there. That's probably a pretty, if we got down there, I'd be looking to cover it. Okay, Chewy, this one's looking good to the downside. This one hasn't broken its major trend, so keep that in mind. Really what I'm looking for on this is at least is to come down to the major trend line, which is this red line right here. So that's what this has been in since about March 2020. We have this uptrend line right here. Huge ramp right there. Pullback, another ramp. But this ramp right up here created negative divergence on the daily chart. So we do have big negative divergence on both PPO and the RSI on the daily, and that's usually what I want to look for. I like to see it on the daily to give me confidence in a swing trade. And so looking at the hourly, this to me looks like we had an entry right here. I took a short position on this, and it's started to break down. It wasn't that impulsive, but now you can see we're starting to get further selling on this thing. So I like it to the downside. I think it's got a good ways to go all the way down to this major trend line. This would be a drop from where we're at right now of about, depending on when we get there, of course, 25%. So I'm looking for that. And then obviously you always have the potential to break the major trend line and you know, and see more selling. But again, we'll have to evaluate the markets and really what everything looks like if and when we get down to this trend line. But as of right now, I like it. Looks good to the downside. Keep in mind, oil continues to sell off. I told you guys yesterday I was short ExxonMobil, and there's lots of ways to play short oil, but the trade's already kind of started to play out, so not the most objective area now to enter a new short. But again, ExxonMobil is, to me, looks like it's coming down to this 41 area. You can see this in the blue line. I've got the 200-day moving average up. That on the hourly, let's look at the daily, see where that falls. Yeah, see the 200 days all the way down here too. So I can see us coming down. Maybe the 200 day starts to turn down and we hit this 41 area. Likely get a reaction or find some sort of support down there. And so again, I like this one to the downside. This one on the daily though did not have short-term negative divergence. I believe the negative divergence is probably, yeah, you have to go ways back. So not really there on the daily. Again, so I'm not really looking for a huge move down. I'm really looking for this 41 as kind of the target. And oh, let me get my tool. From where we're at right now, that's a drop of about 12.5% or so. Looking at the hourly, you can see, yeah, we had some negative divergence right there on the hourly. So again, it's on the hourly, not on the daily, and that's why I'm only looking for a move down to me, what seems like kind of a pretty logical support area. Again, I'll likely step in a little early and cover, but you can see there's the level. This held a support back here. We had some reactions right here. It was support right back in here, so I think it's likely we come back down to support. Another thing that's interesting, I just want to point it out. These ag commodities, Joe, wheat, and corn, all seeing weakness today. Wheat looks like it actually broke trend right here. You can see wheat, we had this trend line that was right like that on your daily, and you got a gap down. That's a sell signal or a break in trend. So if the ag commodities are starting to sell off, and we've seen gold going up to gold, you know, it's down a little bit today too. Gold has been, you know, treading water basically. It's not been moving up. We had what looked like a breakout, right? You know, started to break above this short-term resistance, but it wasn't impulsive, and it just kind of hung out there and then sold it back down. So to me, gold still continues to look kind of weak, and I think we get lower prices in gold. So I'm watching the dollar. That's going to be key. You can see the dollar's just kind of hanging out, holding support. Here's the DXY. This is the, you know, here's the pattern I'm trading off of, and really the premise. You look at the daily, and you've got this bearish falling wedge pattern right here on the dollar, DXY, and then you have bullish divergence on the daily. See that bullish divergence, how we continue to make lower prices right there, but momentum continued to move higher. That's bullish divergence. That tells you that a trend reversal is likely. So then you look for the reversal, and you look for a break of trend lines. And here's your trend line, and we broke there, continued up, and now we're kind of just hanging out in this area, which is really was kind of the first level of resistance. I think it's likely the dollar makes another move to the upside, and if that happens, we're going to watch for the stock market to sell off, and we're going to position accordingly for that. But again, ag commodities starting to sell off a little bit, starting to break trend. The gold's looking kind of weak, so everything's in the cards for the dollar to rise. Oil also is looking weak. We go to USO. This is the oil fund. Let's see what USO is doing. Yeah, oil's down a little bit today. Oil's got a little bit more proving, it's got to go down a little bit more. It hasn't sold off that much. But we're seeing some of the refiners and the oil stocks, start to sell off a little bit too. they're getting rejected at resistance, kind of selling off. So if oil sells off and these other dollar plays, it could really put into question this reflation trade, because again, this reflation trade should be bullish for oil, bullish for ag commodities, bullish for not necessarily bullish for gold, but could be. So we're going to watch that. Just a quick little coverage of the indices. I don't see anything in the indices right now telling me that we have a sell signal today. However, obviously we have negative divergences across the board on the longer term time frames. All this price action right here is divergent high price action, telling me we're going to get that sell signal. We just don't see it yet. So because it's not there yet, the divergences can continue to extend, prices can continue to move higher. We want to wait for that sell signal. I don't see it in the Qs. What's that sell signal going to look like in the Qs? Well, the Qs, I've been kind of messing with these trend lines. I can kind of, I can see this trend line that they're making right here, right about there. So I think we'll probably look at that as our sell signal, and that would be a break of about 313 or so. So yeah, we've got a little ways to get down there. Look for the SPY. Here's the upward price channel on the SPY right there. We've had 3 false breakdowns, so 1, 2, 3. But again, you want to see an impulsive breakdown. This one looked good, but it was a fake out, and this one looked good as well at the time, on this hourly chart. But if you go to the daily, we want to see that breakdown on the daily. This was really the best one. That looked pretty good, but no follow through. So what I'd want to look for is a daily close, and then look for some continued selling the next day. That will really help confirm that breakdown is going to stick. So we want to see this price channel break. Right now it's sitting at about 380. We want to see that break and close impulsively below. IWM. Again, I've kind of modified this line a little bit. There's a lot of different ways that I can use it, but right now I'm going to just go with this upward price channel. Before, I think I had it somewhere right about here. Either way, and then either way, look for that impulsive breakdown. Likely not going to come until you see the large caps breakdown, and we want to watch these fangs as well. Here's the fangs. They're not breaking down today, so that's one of the reasons why there's no sell signal. No breakdowns in the fangs. No real sustained sell signal. These things have to go for the market to sell off. So you can see here, if I look at the hourly on Apple, just kind of hanging out there above support. Microsoft's kind of breaking above this. It's kind of popping above this recent level, having a strong day. No real reason why it's having a strong day. It's just for a fact that market makers or the powers that be are trying to save the market by buying the things. Amazon, flat. Google's kind of flat. But again, no breakdowns in the fangs. So Intel's getting beat up today. However, I don't see any technical change in the swing, kind of the longer term posture. Looking at the daily here. So this thing, really the thing that I was watching for, and it's above support. This is your bull market. We got to go to the weekly on this one. This is your bull market right here. Going back to 2009, upward price channel, held support, had a breakdown right there. Looked pretty convincing to me. I did take the short on this thing right here when we started to re-break, and as it sold off, looked good. But then I saw that it started to recover. I covered my short, and sure enough, they ramped this thing way higher. So that was a profitable trade for me, but not by a lot. But again, now it's way up here. Well, we're having a big down week, but again, still above support. So nothing technical on the bigger time frame. And we'll wrap up with Tesla. Nothing really interesting here for the fact that it's at support, though, basically. So here it's basically gone sideways for almost 3 weeks, I believe. Really just completely flat for just about 3 weeks. That's and here's the support line that this thing's been trading on, kind of the secondary support line. We've just been walking up this trend line here. We've got a couple reactions, and we're right at it now. So no breakdowns, no sell signals. do they break it today? Do they recover? I think what I'm thinking is going to happen. Honestly, I don't know, of course, but I think that it's going to gap either up or down next week. Maybe they'll close it right here on support and it just won't do anything. And then next week it'll either gap up and hold this trend line or gap down, and you'll get that impulsive breakdown in Tesla, which would trigger a sell signal. Until then, we'll have to watch. Looking at the daily on Tesla, negative divergence continues to build. So that negative divergence tells me we're likely to gap down, a higher probability of gapping down. But do we gap up and then that sells off and we break? Nobody really knows. So we'll just leave it there. I'm going to get the video out. Thanks, everyone, and catch you guys on the next one. Bye.